new month of trading kicks off with jobs report. What to know this week? Stocks stumbled at the close of an otherwise positive May, as investors hit pause on AI enthusiasm and grappled with concerns over the Federal Reserve's interest rate policy. Over the past 5 trading sessions, the Nasdaq Composite, XC, remained nearly flat. The S&P 500, GSBC, saw a slight increase of less than 0.2%, and the Dow Jones Industrial Average, DJI, declined by nearly 1%. As June begins, the focus shifts to critical economic indicators and corporate earnings that could shape the market's direction. Labor market in focus. The new month of trading starts with significant attention on labor market updates. The highly anticipated May jobs report, set for release on Friday morning, will provide a key gauge of the U.S. economy's health. In addition to the jobs report, investors will be closely monitoring updates on job openings and private wage growth. Economists expect the May jobs report to show the addition of 185,000 non-farm payroll jobs, with the unemployment rate holding steady at 3.9%, according to Bloomberg data. This would continue the trend from April, when the economy added 175,000 jobs, and the unemployment rate ticked up slightly to 3.9%. A slew of data on the labor market will test investor sentiment on the Fed's path in the week ahead. Besides the headline jobs report, other key labor indicators include the Job Openings and Labor Turnover Survey, JOLTS, and the ADP National Employment Report, which provides a snapshot of private sector employment. These reports will give a comprehensive view of the labor market dynamics and help investors gauge the potential impact on the Federal Reserve's policy decisions. Wells Fargo's team of economists, led by Jay Bryson, noted in a recent report that the strong job growth and inflation surprises at the start of the year led the Federal Reserve to put its plans for rate cuts on hold until at least the second half of the year. This week's labor market data will be crucial in assessing whether the Fed might reconsider its stance. Inflation insights and Fed policy. May ended with some encouraging news on the inflation front. The April reading of the Personal Consumption Expenditures (PCE) index showed a price increase of just 0.2% from the previous month, marking the lowest monthly increase of 2024. Economists described this as better news on inflation than we saw in the first quarter. Despite this positive development, it did little to change investor expectations regarding interest rate cuts. Bloomberg data indicates that investors are still pricing in fewer than 2 rate cuts this year, reflecting cautious optimism. The PCE index is a critical measure of inflation for the Federal Reserve as it captures changes in the prices of goods and services consumed by individuals. The modest increase in April suggests that inflationary pressures might be easing, but Federal Reserve officials have emphasized the need for greater confidence in a sustained decline in inflation before considering rate cuts. This stance highlights the Fed's cautious approach to monetary policy amid mixed economic signals. Federal Reserve officials have reiterated that greater confidence in the decline of inflation is needed before starting to cut rates. The recent strong job growth and higher-than-expected inflation have led the Fed to delay any plans for rate cuts until at least the second half of the year. This week's labor market data will test investor sentiment on the Fed's path and could influence future monetary policy decisions. Corporate earnings. The week is relatively quiet for corporate earnings releases, but some key reports are expected from notable companies. CrowdStrike, CRWD, Lululemon, Lulu, and Dollar Tree, DLTAR, are among the companies set to release their quarterly results. These earnings reports will provide insights into consumer spending patterns and corporate performance amid the current economic environment. CrowdStrike, a leader in cybersecurity, will be closely watched for its performance and guidance amid increasing cyber threats. Lululemon, a major player in the athletic apparel market, will provide insights into consumer discretionary spending, while Dollar Tree's results will offer a glimpse into the health of the discount retail sector. Market outlook. As June trading kicks off, investors will be watching several key economic indicators and corporate earnings reports that could influence market sentiment. The combination of labor market data, inflation readings, and Federal Reserve policy expectations will play a critical role in shaping the market's direction. In addition to the labor market updates, readings on activity in the services and manufacturing sectors are also expected this week. The Institute for Supply Management, ISM, will release its Manufacturing Index and Non-Manufacturing Index, which are vital indicators of economic activity in these sectors. These indicators will provide a broader view of the U.S. economy's health and potential growth trajectory. The ISM Manufacturing Index is expected to show a slight contraction, reflecting ongoing challenges in the industrial sector, including supply chain disruptions and input cost pressures. Conversely, the ISM Non-Manufacturing Index is anticipated to indicate continued expansion in the services sector, driven by consumer demand and business activity. Overall, the market enters June with a mix of cautious optimism and uncertainty. While there are signs of cooling inflation and steady job growth, concerns about the Federal Reserve's interest rate policy and global economic conditions continue to loom large. Investors will be looking for clear signals from economic data and corporate earnings to guide their investment strategies in the weeks ahead. The interplay between economic data and Federal Reserve policy will remain a focal point for investors. Any indications of a shift in the Fed's stance, driven by labor market and inflation trends, could have significant implications for market performance. Additionally, geopolitical developments and global economic conditions will continue to influence market sentiment. In summary, as the new month of trading begins, market participants will closely monitor key economic indicators, corporate earnings, and Federal Reserve communications. The data released this week will be pivotal in shaping expectations for the remainder of the year, particularly regarding the potential trajectory of interest rates and the overall economic outlook.